Hi friends, have a look at my screen and you will see two stocks with their expected returns, hypothetical expected returns and expected risk of falling down for a hypothetical period of 3 months of holding period. Now tell me, out of these two stocks, which stock would you prefer to invest in? Well Rahul, what is rocket science in that? We can see clearly that both stocks are expected to give 10% return in the next 3 months period, but stock 1 has a risk of falling down by only 2% while stock 2 has a risk of falling down by around 5%. So naturally we will prefer stock number 1. And yes, that is an excellent answer, but have a look at this screen now and tell me which one would you go for now. Here both stocks have potential same risk of falling down by around 5%, but stock 2 has expected return of around 10%, twice than the stock 1. In this case, the stock 2 should be our preferred investment avenue. And that brings me to the concept of risk versus reward whenever you want to invest in stocks. Extremely important concept that I want to talk about in this video. And this chart beautifully summarizes the concept of risk versus reward. So the risk is on the x-axis and rewards is on the y-axis. And if we draw a 45 degrees line, what we really want to do is avoid stocks like stock number 2, stock number 3, stock number 1, because the risk of investing them is very high. Risk here essentially means the loss of your money, loss of your capital, while we would want to invest in stocks like number 4, number 5 or number 6 because the rewards are going to be slightly higher, but the risk is going to be slightly lower. And in fact, just few days ago on my YouTube member community, I wrote a detailed post about this concept with some practical examples. And if you are not yet a YouTube member, you can consider subscribing to my YouTube member community because I post on a daily basis stock market updates and insights that will improve your investing style and approach. Try it for 1 month and I'm pretty sure you will find it very, very useful. With that, coming back to risk versus rewards, how to evaluate risk, how to evaluate rewards, I'm going to take 3 practical examples by using 3 stocks from different sectors to give you the comprehensive view of how practically to go and apply this concept of risk versus rewards. None of these stocks are recommendations. Please take these for your learning and learn from it. And people who don't know me, my name is Rahul Jain and I'm a full-time investor. With that, let's get to stock number 1. So stock number 1 is Jio Finance Limited. Have a look at my screen and the first thing we want to do is have a look at the intraday chart of this particular stock. Intraday chart you can do freely on tradingview.com. Please go and just open the chart. Now first we'll try to calculate the rewards part of it, and for that what we are going to essentially do is go back to the previous highest point of this stock from an intraday perspective. I can see that particular point here, somewhere here, which is around at 395. So on 23rd of April, Jio Finance had hit the high of 395 level during the intraday. Now from here, we need to look at the current trading price of this particular stock. So it is trading at around 329 rupees level at the time of recording this video. So the entire hypothesis of the rewards is that this stock can at some point in time in future may go back from 329 level to 395 levels. So this is not a guarantee that it will go, but there are good chances the stock may go back to 395 level at some point in time in future. We don't know when. Now if you want to calculate how much of the upside that is potentially, so we're just going to draw it from here to almost till this point in time, and it gives us almost 16.50%. This is your reward, which is 16.50% of the percentage upside is possible in this particular stock in the next few months. Now let me delete it and come back to the risk side of it, and for this what we need to do is find out the lowest bottom that we have seen in the stock in the last few months. Here we really need to use our judgment because I can see that the stock made a bottom here on 4th of June crash. Stock also made bottom somewhere here, somewhere here, somewhere here at various points, but point here is that you see the 4th of June crash window here. Let me make it bigger, and you will see that the stock saw a huge volatility during this particular day and it fell to almost like 307 level. After this 4th of June crash, it has not gone back to 307 levels. So in my view, the potential downside I see right now is that it might go down from 329 level to almost 307 level maximum. So if we just try and find out what percentage of that draw is here, and for that if I just draw this here, we are going to see that it is almost at around 7%. Here the risk of the stock falling is around 7%, but the upside here is around 16.50%. This is one way of you going and calculating risk versus reward. Now we cannot just go and invest on the basis of price chart because our risk assessment or reward assessment might go horribly wrong. So therefore we need to do fundamental analysis of the stock as well to find out if there are any red flags in that particular stock. Now for example, in the case of Jio Finance, what happens if the stock goes down from 307 level to let's say 258 level hypothetically? fundamentally. In that case, if the stock is fundamentally good, you might want to extend your holding period so that you can recover your losses. So on Jio Finance, I had created 2 full videos on fundamental analysis of Jio Finance. Please go and watch them. You're going to learn about this particular stock a lot. But in this video, let me quickly cover 2 hypercritical points, the latest updates that I have seen on Jio Finance. First point is that if you look at the shareholding pattern, in the last couple of quarters, you will see that FIIs have reduced their stakes from 19.83% to almost 17.55%. And in the current context, when I'm shooting this video, the market is corrected already because of the Japan noise, because of the US noise. I created a full video on that topic as well recently. But my point here is that FIIs have been selling Indian equities. You can see it here that overall on 5th of August, maximum day, they sold 10,000 crores net. And DIIs have been buying the Indian equities. So in my view, the FIs have already done a lot of selling in the last week or so. So the chances of FI doing more selling in the coming weeks is slightly on the lower side. Therefore, I can assume that Jio Finance FI selling might not happen. Again, this is the way to do assessment. It is not guaranteed that there will not be any FI selling. Second critical point about Jio Finance is their PE ratio. Many people on my channel leave a comment that Rahul, the PE ratio of Jio Finance is around 130, extremely high. Why are we even considering this stock? Why are we even talking about this particular stock? See, in my view, the PE ratio of Jio Finance does not really matter, because if you look at their quarterly results, you will quickly notice that their entire income is coming as an interest income, which is the interest they are earning on their investments. The company has not yet started generating operating income from their various businesses that they are still building right now. So in my view, ignoring PE ratio of Jio Finance is more sensible approach. It will become important when the time comes and their all businesses are operational. We can see some revenues coming up, we can see some profitability coming up and all that. Second stock that I want to analyze from a risk versus rewards perspective is Bank of Baroda. Have a look at my screen and you will see that on 3rd of June, the bank made a high of almost around 300 level. So you can see 300 price level here. While right now the stock is trading at around 240 level. And if I draw this, you will see that it is down by almost 18.84%, meaning that if this were to go back to its previous high level, which is around 300 level, there is a likelihood gain of around 18%. Again, this is not a guaranteed gain. This is just an assessment that if the stock were to go back to the previous high, it could potentially gain 18%. Now, in terms of the risk associated with this stock, in terms of how much it can go down by, if you see the 4th June or 5th June crash, we will notice then 5th of June, it was at around 236 level. And in fact, recently it made a low from that level as well to around 230 level, 231 level here. So we have to consider the 231 bottom. This is because it is down from the previous bottom that the stock made very recently on 4th or 5th of June. So if I were to delete this one here and draw the another one, it's going to be around 5% downside that the stock might potentially see. So here the risk versus reward ratio will be 5 is the risk and 18 is the reward. I have just rounded it. So 5:8 is the risk reward ratio for Bank of Baroda. Does it mean that you go and invest in this stock? Absolutely not. We need to do the fundamental analysis of this stock. So let me give you 4 hypercritical points about Bank of Baroda. First hypercritical point is the past performance of Bank of Baroda, and have a look at my screen and you will see the P&L statement from the last few years, and very quickly you will notice that the profit of this company in the last 3 years have gone crazy. You can see here it has gone from 8,000 crore back in 2022 to almost 15,000 crore in 2023. And if you look at the CAGR growth in the last 3 years have been around 144%. Extremely high profit growth in the last 3 years. If you look at the loan book of this bank, very quickly you will notice that this is a very well diversified loan book. Retail is contributing around 26% here as of June 2024. Corporate sector here is contributing around 23.3%. Number 3 is agriculture, 15.8%. Infrastructure is contributing around 12.5%. I can see that it is very well diversified loan book, giving less risk exposure to this bank. Hypercritical point number 2 is how is this company performing recently in the last quarter. And if I show you the results, you will see that net interest income has gone by around 5%. Net profits have grown by around 9%. So the company is not making losses in the last quarter. Also, more importantly, if you see the bad debt of this company, GNPA, NNPA has come down massively in the last quarter. And one of the key reason for that is the Go Air flight where the Bank of Baroda had given loans. They are able to now claim that some of that money from National Credit Guarantee Trust because the loan was given under a particular scheme. And it is likely that the bank is going to recover the remaining money in the next few quarters, taking the bad loans further down in the coming quarters. Also, if you look at the deposit growth, last quarter they have achieved 8.9% deposit growth, while the loan growth, advance growth has been around 8.1%. And this is important because here the deposit growth has been slightly higher than the loan growth, which is where many banks are struggling because their loan growth is slightly higher than the deposit growth, giving them liquidity problems. For example, SBI has been struggling with that in the last few quarters. Although overall bank has performed very good in the last quarter, but if I look at the guidance that the company gave, it is slightly performed lower than the guidance. Now, hypercritical point number 3 about this bank is what about the future growth, Rahul? So have a look at my screen. You will see the bank is predicting around 13.5% of the growth for the next 5 years, which is quite healthy in my view. Lastly, if you look at the valuation of this company, Bank of Baroda being I think the second largest PSU bank, if you look at the PE ratio 6.64, much lower than the industry PE of 9.46, and PB ratio is 1.05, slightly over the industry PB of 0.94. In my view, it's not highly overvalued at all. So I've given you a lot of information about Bank of Baroda. Please do not take this as a stock recommendation. I've given you a practical example of how to go about risk and reward analysis in stocks. And if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. With that, let's move to stock number 3. Third stock is an IT product company specializing in the banking sector. And the name of the company is Intellect Design Arena Limited. Have a look at my screen and you will see that the company made a high of almost 200 rupees level on the 15th of March 2024. Right now the stock is trading at around 938 level, and if I were to draw this, you will see that it is down by almost 22% from its previous high point. Can it go back to 20%? This is what we can consider potential reward, not a guaranteed return, potential return of around 22% from here on. Now let me quickly delete this here and try to find out the bottom of the stock, and we can very quickly see here on 4th of June the stock made a bottom of around 816 rupees. It is now trading at around 938. So let's try to draw this and calculate how much of potential risk is involved in investing this particular stock. So if I were to draw it from here almost and go back to this level, it is going to be around 14% or around 15% of potential fall may happen if it were to go down to 4th June levels of price. So here you will notice out of the 3 stock, Intellect Design Arena has slightly higher side of the risk here. It can go down by around 14 to 15%, while the upside was around I think 22%. Let me now quickly give you 3 to 4 hypercritical points about this particular stock from a fundamental perspective. Hypercritical point number 1 is that the company is a global fintech product company, and as you can see here, majority of the banks globally are the client of this company, having a very good solid client base. If we look at the P&L summary of this particular stock, we are likely to see that in the last 3 years the revenues has grown by around 19%, profits have grown by around 8% CAGR. Is it good or bad, Rahul? So for this, what we could do is we can compare this with Oracle Financial Services Limited, which is another global IT product company working for banking and financial sector. And if I look at the Oracle Financial Services last 3 years of revenue growth, it is around 9%, while the profitability has grown by around 8%. So from a revenue perspective, Intellect Design Arena has done much better, 18% versus 9%, but from a profitability perspective, both companies have done around 8%. Now coming back to the recent quarter performance as well, if you see, you will very quickly notice that the company's profits have been down to 97 crore from last year's Q1 perspective of 126 crores. Also from a sequential perspective, it is down from 122 crores to 97 crores. So last quarter has not been very good quarter for the company, and that is why if you look at the chart of this company, you will very quickly notice this fall that you see in the month of July onwards. This entire fall is mainly because the quarterly results were not good. Hence a lot of damage has already happened here, and the market has already sold the stock because of this bad quarter performance. Now point number 3 is how's future looking like for this company, and if you look at the order book of this company, you will see that the order book has growing up consistently. But one important point here is that although the order book has been consistently going up, why the revenues were down last quarter, and for me this could be a cause of concern that the risk may play out here. Point number 4 is about shareholding pattern. Very quickly, promoters have maintained their stake. FIs have done some little bit of buying from 25% to around 27%. DIs also have done some buying from around 3.8% to 5.23%, while public has sold the stake from 38% to 36%. You can very quickly see that the big investors are buying while the retail is selling the stock. Point number 4 is the US concerns right now in terms of the recession. Nasdaq has been down by almost 12% in the last 1 month because of the tech sell-offs, and this company is a tech company, and in my view that risk has already played out, because if you look at the chart here, you will very quickly notice that 5th of August the stock fell by almost from 936 level to to almost around 889 during the intraday. But that risk is entirely not yet over, because we need to really wait for the next 1 month of how the US employment data looks like. If I look at the valuation of Intellect Design right now, the PE is at 42, which is higher than the industry PE of 35, while the PB is at 5.26, which is slightly higher than 3.70 of industry PB. So I've given you totally unbiased analysis for all the three stocks. It is not a stock recommendation. Pure analysis is what I've done for you. And if you like that, hit the like button. Let me know in the comments a simple thank you. You can also consider subscribing to my YouTube member community, because I post almost on a daily basis, bringing you latest updates, insights from the stock market. And that will help improve your investing style and approach. With that, I'll see you in my next video. Until then, keep rocking.